Welcome back to BestProp4U. US markets are continuing their record highs today, notably in Nasdaq, driven by a mix of hot economic data and shifted sentiment in the tech sector. Job openings absolutely surged in April, hitting the highest level since late 2024 and smashing expectations. It is these, combined with rising energy prices from the ongoing Middle East conflict, that halted the slide in treasury yields and pushed the 10-year back towards 4.45. So the Nasdaq is moving higher. Semiconductor stocks have been on fire, with like HPE and Marvel up double digits, 20% and 30% on AI optimism. However, major software players are correcting. Alphabet dropped 2% after it announced 80 billion equity issuance to fund its AI infrastructure. Well, let's see how this intense tech battle looks on the charts. Looking at the daily chart, the Nasdaq has had 2, 4, 6, 8, 10 consecutive winning days, which is a huge rally. But it's been hard-fought battle every single day. Plus, we have a RSI divergence. And this is important given that we're seeing this on the daily chart. So price is pushing the upper limits also outside a base channel, I would say, because connecting the two lows and the peak gives us a base channel. So we are looking at this as an accelerated move, but it comes without momentum. Okay, so if this is, we've got the 1 and the 2 and the 3 and the 4 and perhaps the 5th wave, yeah, of a larger 5-wave structure, we could see a push all the way up to, let's see, for example, we'll be looking at the Fibo down here. We're looking at 32,700. And currently we might be actually facing resistance at the 78.6. There we go. Which also suggests, a potential pullback. All of the Bollinger Bands are looking up. Important for context. The big question for the medium term is, can a breakout from this channel be sustained with momentum slowing down? Or will it quickly revert? While all of the Bollinger Bands, again I repeat, are looking to the upside. Well, for more signals, of course, we're going to have to drop down on the 4-hour chart. Our typical MTFA analysis. Let's take this off. We don't need to see that any longer. We do see multiple divergent signals as well here. You've got one over here. I've got a second one over here. No, and we're actually seeing the third one too. It doesn't matter if it's going to last or not. What matters is that we have had actually multiple RSI signals. The line in the sand right now, actually, correction. The line in the sand right now is 30,300, which is the middle Bollinger Band. Below that, we have the 29,700. In between, obviously, we've got the 30K support, very important to consider given its psychological importance. Okay, and that will be, of course, a level to consider as a potential pullback. Okay, we've reached that level before where we tested it and flipped it to resistance to support. Excuse me, that was a previous all-time high back in the middle of May. So a break there, opens the door all the way down to, what was that? To 98,920 or so, the 61.8 Fibo. But while we look further out and different levels on the Fibonacci's, we can also look at potential extensions to the upside. One of the levels to pay attention to is the 30,790, which is the 61.8 Fibonacci extension. And then you've got the 31K. The 31K is more important than the 61.8, not because of the Fibonacci relevance, but because it also aligns with a psychological resistance. So should we take out that level, the next to the level to the upside is 31K. Okay. Now, and as we always do for the trading plan, of course. Down on the 1 hour, what do we see? We are currently carving out what could be a double top over here, right? You've got a top at 30.70 or so, and roughly we are at the same level right now. And that is accompanied again on the 1 hour as well by a bearish divergence. Okay, actually the bearish divergence was over here, then you got from here to here and from here to here as well. We are, however, seeing an expansion in the Bollinger Bands, okay, and a tilt to the upside, meaning volatility is increasing. This volatility suggests we could see another leg down to test the critical 30,030, okay, which actually brings us back to the previous bottom, as well as have an extension to the upside, which with the levels that we've already talked about. But remember, this could just as easily turn into a double bottom, okay, if the support holds, with an upside extension, of course, coming exactly as we said before, and magically, should I say, at 31k. Okay, so this level becomes more important. So the question here at the 1 hour is, are we going to see a double top here or a pullback and a double bottom? Because these two have different interpretation. Typically, a double top means we revert, but we're on the 1 hour, we could revert in the short term, and eventually, you know, if we don't reach this territory, it could end up being a double bottom, excuse me. Typically how that works is you got the first bottom, second bottom, this acts as the neckline. The moment that breaks, then we could see a pullback, further continuation, but we would not be looking at prices going below 30,500. So if we go lower, any support here could be a simple bounce and further continuation. And that continuation, okay, and equally the same method, we'll be looking for an extension, a measured move all the way down to 20,900 to 29,900, which is of course the 30k first, and then we'll look at 29,700. So watch the 1 hour structure closely. If 30,050, okay, breaks, and then of course we have the 30,300, the immediate downside targets are 30,000 and then 29,700. If 3050 or currently this level breaks, the 3066 or so, then this could just as easily be the double bottom we talked about, okay, and we'll be looking for long entries targeting the 3079 and the 31k. Trade safe and respect the volatility.